The million-dollar question. Billion-dollar question, Bitcoin. The very word sparks debate. Early adopters remember its humble beginnings, trading for fractions of a penny. Critics scoffed. Who could have predicted its meteoric rise? Bitcoin smashed through milestones, reaching heights once deemed impossible. $1,000, a distant memory. $10,000, surpassed. $60,000, reached and then some. Now a new question emerges, bolder than ever. Could Bitcoin reach $1 billion per coin? This question seems outlandish, even absurd. $1 million per Bitcoin? Sure, a possibility, but $1 billion. That requires a seismic shift, a fundamental reshaping of finance as we know it. However, dismissing this notion outright ignores the volatile nature of Bitcoin. It ignores the transformative potential of this revolutionary technology. It ignores the historical precedents of seemingly impossible financial booms. To understand this billion-dollar question, we must delve into the forces at play. We must explore the potential catalysts that could propel Bitcoin to such unimaginable heights. investors not only brings in more capital but also adds a layer of credibility to the market. This could potentially lead to wider acceptance and integration of Bitcoin into the global financial system. When scarcity meets global crisis. Bitcoin's limited supply is a key characteristic often cited by proponents. This scarcity is not just a trivial detail, it is a fundamental aspect that differentiates Bitcoin from traditional fiat currencies and other digital assets. The concept of scarcity is deeply ingrained in economic theory, often driving value and demand. Unlike fiat currencies, which can be printed endlessly, only 21 million Bitcoins will ever exist. This cap on supply is a stark contrast to the seemingly infinite printing of paper money by central banks around the world. The ability to print money at will has led to inflation and devaluation of currencies in many countries, eroding purchasing power over time. This scarcity is hard-coded into Bitcoin's protocol, ensuring its long-term value proposition. The code is transparent and immutable, meaning it cannot be altered by any single entity. This decentralized nature of Bitcoin adds another layer of security and trust, making it a reliable store of value. This limited supply takes on even greater significance in the face of global crises. During times of economic uncertainty, people often seek assets that can preserve their wealth. Bitcoin's scarcity makes it an attractive option for those looking to hedge against traditional financial systems. Economic downturns, geopolitical instability, and even pandemics can trigger a flight to safety. When traditional markets falter, investors look for alternative assets that are less likely to be affected by the same issues. Bitcoin, with its decentralized nature, offers a unique form of financial security. Investors seek refuge in assets perceived as stores of value, assets that are not subject to the whims of governments or central banks. Bitcoin's independence from any central authority makes it immune to policy changes and political decisions that can impact traditional currencies. Gold has traditionally played this role. For centuries, gold has been the go-to asset for preserving wealth during turbulent times. Its physical properties and historical significance have made it a trusted store of value. However, Bitcoin, with its digital nature, portability, and resistance to censorship, is emerging as a digital gold. Unlike gold, Bitcoin can be easily transferred across borders without the need for physical transportation. Its digital form makes it accessible to anyone with an internet connection, democratizing access to a secure store of value. In times of crisis, demand for scarce, decentralized assets tends to skyrocket. As more people recognize the benefits of holding Bitcoin, its price can experience significant upward pressure. This increased demand is often driven by the desire to find a safe haven for wealth. This could propel Bitcoin's price far beyond its previous all-time highs. Historical data has shown that during periods of economic instability, Bitcoin's price often sees substantial gains. This potential for high returns makes it an attractive investment for both individual and institutional investors. Furthermore, as awareness of Bitcoin's limited supply grows, so too does its desirability. Educational initiatives and increased media coverage are helping more people understand the unique value proposition of Bitcoin. This growing awareness is crucial for driving adoption and acceptance. The fear of missing out, or FOMO, is a powerful motivator in financial markets. As Bitcoin continues to gain traction, more people are likely to invest, fearing they might miss out on potential gains. This psychological factor can further drive demand and consequently the price of Bitcoin. As more people understand that Bitcoin is a finite resource, the rush to acquire it could intensify, driving its price ever higher. The realization that there will only ever be 21 million Bitcoins creates a sense of urgency among investors. This scarcity, combined with increasing demand, sets the stage for potential exponential growth in Bitcoin's value.